Yeah, morning traders. Well, we've got another episode of Technical Tuesdays today, and I'm excited. There's a lot going on in the market, um, and as per usual, do like, subscribe to it, and it will be live in TradingView if you have any questions. Sorry about that. So let's kick things off with the dollar, and yeah, very interesting. We've broke below those May 5th lows at 102.2. And price is sliding now lower towards that 38.2 Fibonacci retracement level, just below 101, and the 50-day simple moving average. The RSI's run down quite a bit. We're getting nearer to oversold territory. That will be a key level if we do move there for dollar bulls to hold. Um, it's mainly, risk sentiment isn't that great this morning. We can see almost a big bearish engulfing candle, and price is moving down lower, back to down towards the 3.9k level. The RSI is still got a bit of room to run lower, and I mean, look back there in January of this year, we actually saw, price, the RSI got a lot lower, deeply more oversold. So there is still some room to run on that front. Um, it's a euro story really, with Lagarde coming out, telling the market that we'll see a 25 basis point hike in July and September, with rates getting to positive territory by the end of quarter three. And there's only two meetings there, so that's the obvious take there. She says this morning we had a turning point, that they're attentive to movements in the euro, so this is all having a positive effect. And yeah, it's looking really good for the euro as a result of this. And price is rallying up to the 50-day simple moving average of 38.2 fib at just below 108. The RSI has moved up. It's getting quite close to that 62.5 where price has peaked in the past. So we'll have to see if those confluence of factors, that resistance, ends up making rallies get sold. Let's move on to cable. Following in the footsteps of its European counterpart, we've broken through that 21-day exponential moving average. We back up at that 38.2 Fibonacci level, just shy of 126. The RSI's got a bit more room to run before we get up to that 60.44 level. And yeah, price is looking good. But again, is this a short the rips sort of market? Is the dollar's strong run over? On the downside, I'd be looking towards moves back to this little support level here at 124, the 23.6 Fibonacci level. Let's move over to Euro GBP. It's bounced quite nicely off that 200-day simple moving average. Price couldn't get back into its channel properly, the descending channel. The RSI is moving back towards that level there at 63.68, which has acted again as resistance when prices got up to there previously. But now we could be in a new paradigm here, regime, where we outside, we're above this descending channel, above the 200-day simple moving average, and yeah, that might not work anymore. The RSI might need to move now to complete overbought territory up around 70. Looking at US dollar JPY, this level of support here is really key at 127. If we break below there, then we could really see the dollar start to lose, because if we have the strength from the euro and we have the strength from the Japanese yen, well, then the dollar is in trouble. Below there, we've got the 50-day simple moving average at just above 126. And these are interesting levels to watch. I think 130 on the upside would be key in terms of targets above. Let's move to Aussie dollar, USD. We can see price, it got up to that 23.6 Fibonacci level, and now it's 0.701, so we're just below 0.709. We're just below that 0.71 level. And yeah, we'll have to see what price does here. That's a really key level of resistance. And the RSI sort of looks like it's rolling over, so we'll have to watch that one. Aussie's obviously going to follow risk sentiment and what's happening in China too. That's important for the Aussie. Let's look at the key barometer of risk, AUD JPY. And again, like the S&P 500, we can see we've got that red bearish candle. It's not a great read on risk sentiment in general, but yet the dollar's still down. But as I said, it's a euro story. So levels here that I'm watching, 50-day simple moving average, obviously key, and then back down to 88 around that 50% Fibonacci retracement level. Um, let's move on to commodity space. Gold in dollar terms is doing well. It's still above that 200-day simple moving average. The RSI's got a bit of room to run. I think 1875 would be the next key level of resistance. 1870 around there. That's very important if we can get breakthrough there. Will this 21-day exponential moving average act as dynamic resistance? Will it hold? Will it bring the sellers in? Um, let's move on to spot Brent. We got very close to the top of that range resistance. However, price could not rally further than that. We're a bit down today. I think crude's following general risk sentiment. And yeah, the 115 remains to be seen if it can be broken. And on the downside, I think the midway of the band around 110, where the 50-day simple moving averages would be a first port of call if price was to decline and pull back a touch. That's it for today's. Oh, sorry, nearly forgot. We got interest rate pricing here. It's kind of been quite stable, just below 8 for into December from the Fed, and just below 5 in September, and just below 3 in July. Remember, this is in 25 basis point increments. So yeah, hope you've enjoyed today's episode of Technical Tuesdays, and I'll see you next week for another episode. Cheers.